Hey, grain of salt here. It's Thursday, May 7th, about 4:30 Pacific Standard Time. I wanted to cover something relatively complex, and I want to take you through it. And a lot has changed since Tuesday of this week when Strategy did their earnings report and for Q1 2026. And what changed in it? They said they'd sell Bitcoin. So what does that mean? I don't really want to cover that part about selling Bitcoin and Bitcoin per share. What I want to cover about is what changed from when I wrote my book that got published in January, why part of the book is obsolete, and how I look at structure, how I look at metrics, and how I look at narrative. There's three things. A Bitcoin Treasury company, and any publicly traded company, one of their key goals is capital formation. But for a Bitcoin Treasury company, capital formation is the key goal because they want to be able to access the capital markets in order to buy more Bitcoin. And on this website that you can see here in the background, bitcoinquant.co, which was made by Rohan, is a brilliant website. I have nothing to do with the website. He built it. There's a couple things that I asked him to do when he had built it, but I really do not control the website. With that said, I want to cover a few things here, what I wrote in the book and what's changed since then. And so let me talk first off about structure. And what do I mean about structure? Well, one of the mantras in 2025 with Bitcoin Treasury companies was who can acquire the most Bitcoin and who can acquire it the fastest. What happened was it turned out that that was not durable. You never hear the word durable. So what happened was they were able to do various ways to acquire Bitcoin by doing common stock ATMs, by moving strike warrants, whatever it was to acquire Bitcoin. So if you go to this website and you have the up and down buttons, you could then sort each column and then it resorts the other. It sorts based upon that first column. So if you look at the first column, obviously Strategy has the most Bitcoin, 818,334 Bitcoin. Okay. And we see that 21 Capital is in second place, Jack Mahler's company. They have 43,514 Bitcoin. Okay. The question is, what company did this the most efficiently? And in traditional finance, we're not going to do any math on this discussion because all the math is going to be here that you can see in front of you. It's already been calculated. But there's something called the PE ratio, and that's price over earnings per share. And so what we look at this and what Strategy invented was a metric called Bitcoin per share, and they represent it as in Satoshis. So it was like 200,000 Satoshis per Bitcoin. To make it a little bit easier, I inverted the metric and I made it shares per Bitcoin. And you want that number to go down. You want Bitcoin per share to go up. That means you're getting more Bitcoin per share. And shares per Bitcoin you want to go down. It's just the inverse metric because it says it takes less shares in order to buy a Bitcoin. Okay. So that's my metric. I did a post on it. It got almost 5 million views in January. And then I wrote this book. So what I then did was I thought about this is, well, let's look at it as shares per Bitcoin. And so when you do that, and I'm going to hit this button over here and resort it. So if you compare Strategy against itself, we know that they have 818,000 Bitcoin and they have basic shares outstanding is 349 million. And what that means is they have about 426 shares per Bitcoin held. You're like, okay. If you compare them against themselves, it's 1.0 because you're comparing against themselves. The company that's in second place is Strive. Now, what's interesting about Strive is that Strive had a 20-for-1 reverse split on February 6th. And you're like, okay. And what people have said to me when I have this discussion with them, they're like, a reverse split doesn't change the percentage of ownership. And I go, you're correct. You're absolutely correct about that. But let's just leave this in the context of Strive for a second here. Well, if they didn't do the 20-for-1 split, then this stock price over here would be about 77 cents. And a capital allocator, remember I said that a Bitcoin Treasury, publicly traded Bitcoin Treasury company is about a capital formation? If a stock is below $1, or if it's below $5, or if it's below $10, there are different governance and audit metrics to say we're not going to invest in that company because we perceive that that stock price is too low and therefore they're not a good steward of managing their structure. They don't necessarily use those words, but that's why that exists. So Strive would have 20 times the 73 million, right? Which would put them over 1 billion shares. And this would be 77 cents or so. And what they did is they completed the Semler acquisition. They did the reverse split. So now their structure is much better. And you're like, oh, okay. What else did they do? Well, they have very little debt. I believe that their debt's about $10 million and not $4 million. But when you look at it, it's only 0.3%, or let's say it's 1% of their net Bitcoin net asset value. It's a very low number. In fact, it's much lower than Strategy. You're like, okay, so they're off by 11x. Again, in this column over here, they have 11.4x times as many shares as Strategy has per Bitcoin. You're like, okay. Now, what's interesting is they're about 1/60th the market cap. So if you look at the market cap, they're about 1.129 billion. Strategy is about almost 63 billion. So that's interesting because their share count is off by 11x, right? But their market cap is off by 60x. So again, you're like, that's an interesting way to look at it. So they have a good structure and the metrics are pretty good. Another metric to look at when you scroll over, and you can change where these columns are on this website, is their trading volume. The trading volume is $38 million for today. And if you look at the 30-day average, it's 53 million. So I could drag this over here, and you can see the 30-day average is 53 million a day, and today, for some reason, it traded 38 million, and that's great. Now, let's take a look at Sequans. I don't have any interest in Sequans in terms of owning the shares or anything like that, but Sequans, their shares per Bitcoin multiple is 17x, and you're like, okay. So they don't have too many shares, and they're a much smaller company. But as you scroll across, you're like, wait a second. Their debt to BTC NAV is almost 39%, whereas Strive is like 1%. You're like, And the market cap is 54 million, and their trading volume is basically too low to see. And the average 30-day volume is 1 million. So you're like, And then you look at the total open interest, and it's like 0. So what does it mean? If I'm a large capital allocator and I want to put $100 million or $10 million or any amount of money into a company, I might also take a short position in it to hedge that position. That's where a hedge fund comes from. And so what I would want to do is take an offsetting position in case the stock goes down, that I'm protected. And you see that happening with Strive, because you look at the total open interest is $2.7 billion. The company has a $1 billion market cap, but the open interest on it, whether those are short or long on it, is $2.7 billion. So there is a robust option market on Strive. You're like, okay, that makes sense. So now we'll go talk about some of the other high flyers that we've all heard about. Now, I was a big investor in MetaPlanet. I sold that off last year. And so with that said, we take a look at MetaPlanet. Now, MetaPlanet, when I bought it, had about 7,500 Bitcoins or 7,000 Bitcoins, whatever. They 5x the number. They've increased the Bitcoin. But MetaPlanet has almost 1.3 billion shares outstanding. And you're like, oh. And now when you look at the metric, right, they're 74x times more shares per Bitcoin than Strategy. Now, I'm going to go off on a little bit of a tangent here. On the Mag 7 companies, the Magnificent 7, people ask me, what's a good PE ratio? Well, if your price over earnings per share and your earnings are 0, then your PE ratio is undefined. Most Mag 7 companies have a PE ratio of somewhere between 25 and let's say 40. Okay, or 25 and 45. That's their PE ratio. You're like, okay. So there's an equilibrium point. There's a sweet spot of where it is. Tesla's PE is about 150. So if I have a 20 PE on my company and Tesla's 150, you're paying 7.5 times more per stock, more for a given earnings per share than for my 20 PE. And that's a calculated metric. You just look at it, you're like, oh, that stock is more, that stock is more expensive. And you're like, on a per share basis, you're like, again, the per share basis is important. You're like, okay, that makes sense now. So now we're seeing what it's not about the valuation. It's like, what am I paying for that stock for that given return that I'm getting? So for Bitcoin Treasury companies, we look at the share efficiency. Now, we go look at some of the other high flyers and we get down to, Nakamoto, they're 300x. You're like, they have 300 times as many shares as Strategy or 30 times more than Strive. You're like, well, you could be off by 10x. You could be off by 15, maybe 20x. You don't want to be off by 300x, right? or so that becomes problem. The ratio is getting too far out of whack. The other thing is you can't just look. I'm just going to buy one metric. Nakamoto has pledged some of their Bitcoin as collateral, and we believe it's about $210 million. So about 48% of their Bitcoin is pledged as collateral. It does not mean that they can't get out of that and change it. It doesn't mean that those Bitcoins have been liquidated or anything like that. It just means they're pledged as collateral. So their balance sheet comparing 48% versus Strive. Let's say Strive's debt was 1%. Let's just say it was 1% to make the math easy. Nakamoto's debt is 48 times worse than that because 48 times 1 is 48. That's a big difference. And so it's all about having a really, really clean balance sheet. And then we look at other companies, for instance, Smarter Web Company, which is 343. So when I look at something, it's the structure, it's the metrics. How does it trade per day? Is there a large trading volume that we're seeing here? What's the average 30-day volume? Is that about consistent? What's the total open interest? Can large capital allocators, can they hedge that position for downside? And you're like, this all goes and makes sense for this. Now, the other thing about Strive, which is different, Strategy and Strive, why are they in a class differently? They're the only two companies that have out the only company to have a pref out besides Strategy is Strive. And Strive has SATA, which is very analogous to STRC. Why is this important? I'm going to switch here to shares. If you look at shares outstanding, there's basic shares outstanding. And you can see here for Strategy, the basic shares outstanding is 350 million, about 351 million shares outstanding. Then they have these converts, and Strategy has said that they want to get rid of these converts. They want to retire them, and they've said this on the call. Okay, so these converts mean at a specific date and at a conversion price, they can convert into shares. The problem with the converts is that when I buy the converts, I don't have those shares. I have an agreement saying that on this date in the future, at 30% or 40% or 50%, I will get this uplift into, if the stock is there, I can then convert into shares and I'll make that 30, 40, or 50%, whatever it is. Well, again, it goes back to the option market. I want to delta hedge that position. So I take a short position because if I'm getting a 30, 40% uplift, that means I'm long in the convert. So therefore, I'm going to short it to make sure if it goes down that I'm covered. And then the difference, the delta hedging, the difference is how much I make on a monthly or yearly basis. Now, there is one pref listed here, STRK, that does also convert, that's listed here. And then at the bottom, you get what's ADSO, assumed diluted shares outstanding. Now, for Strategy, it's only off by about 10%. So even with Strategy, it's not like the diluted shares outstanding doubles, but the delta hedging is problematic, and that's why they're getting rid of this. So with that said, when I wrote the book, The Rise, Fall, and Reemergence of Bitcoin Treasury Companies, I wanted to be able to say, did Strategy get lucky? Did Michael Saylor get lucky? Is his share count based in some form of reality? And I was like, and I had to do some research, and I then figured out a way to do it. Because with Bitcoin Treasury companies, I just took you through, we can compare them the amount of shares per Bitcoin. And since Strategy has the best structure, the best shares per Bitcoin, the lowest number, I will go back to this page over here, Strategy has 426 shares per Bitcoin held. They have the best metric. I was like, okay, I know they have the best metric, but how does that compare to Mag 7, the Magnificent 7? So I've recreated this here. Originally, I've created my site before Rohan even created his. And so I had already done this analysis of shares per Bitcoin. And I'm like, but except for Tesla, none of the Mag 7 companies have Bitcoin. So I'm like, I need a way to normalize the comparison. So I made up a metric, shares per $1 million of BTC market cap and shares per $1 million of equity market cap. And for Strategy, they have 5,560 shares per $1 million of equity market cap. And I was like, oh, that's interesting. And then I'm like, how does that compare to Mag 7? Well, let's just look at NVIDIA, the biggest market cap and arguably probably the best run company in the world right now. And obviously with their AI play, NVIDIA has 4,728 shares per $1 million of market cap. There's only a 15% difference between Strategy and NVIDIA. And between all of the Mag 7 companies, basically Strategy is within that range. They're off maybe a maximum of 70%, okay, which is over here, which is Facebook. Now, what's interesting is that Netflix did do a stock split, and they have more shares outstanding than Strategy by a 2x number. Notice that I'm saying that it's within a range of 50%, so it's off by 0.5 or maybe 1.0. We're not talking orders of magnitude of 10x, 20x, 30x, or 300x. And so Strategy did not get lucky. Michael Saylor founded his company, I think approximately 1996, and then it went public during the internet boom, and he was the longest public CEO of a publicly traded company until he handed off to Fong Lee. And so he did that for approximately 25 years. I could be off by a year or two. With that said, he understood the capital markets and capital formation. You can't have a stock sub $1. You can't really have a stock sub $5. You can't really have a stock sub $10 in order to attract capital. And so while a reverse split means the percentage of ownership stays the same, how it looks through capital formation is something that's completely different. And so what I wanted people to think about is that I needed a mathematical way to compare these. And so I thought that it was incredibly interesting that I can compare them against the Mag 7. So now wrapping this up and going back to the Bitcoin Treasury companies, to sum up what I've talked about here, is that Strategy not only has the most Bitcoin, but it's the most efficient in terms of shares. And anybody that knows Bitcoin, it's like, well, there's 21 million Bitcoin. Like, yeah, we should make more Bitcoin. No, we shouldn't. There's a fixed and finite amount. And what Strategy said on Tuesday is that they care about Bitcoin per share. And you're going to see this 426 number drop below 400, then drop below 375, then drop below 350. They want to make it more dense with Bitcoin. Each share can buy more Bitcoin. That's their goal. And Strive is the only other company that got out of pref. They got out SATA to compete against STRC. And so again, we go back here, when we talk about SATA does not, or Stretch does not increase ADSO, assumed diluted shares outstanding, right? So if I click on STRC over here, this whole page does not affect the amount of shares outstanding. And so when I look at this structure here, I'm like, oh, this is durable. It's durable because they don't have massive amounts of shares per Bitcoin. Now, if somebody says, okay, let's just all do reverse splits. Okay, you did the reverse split. But then we have to look at the trading volume. Did you convince that your new structure and your debt that you have also in your balance sheet, is that durable? Are you a good steward of our cash in order to go raise this, to go buy more Bitcoin, right? If I want to do capital formation for this, do I want to put my money, will I be able to sell this to institutional investors? You'll probably be able to find an investment bank that'll give you money, right? And they'll be able to do a couple deals. And if your stock price collapses below $1, then you can't do capital formation. So I went to Strategy World. I discussed this. I was at the Bitcoin conference. I've discussed this. And the takeaway for this is that people have said, I really haven't heard it discussed I haven't really heard somebody come up and look at it this way. And I'm like, sure. If you don't like my way, tell me how you would evaluate these companies. And they're like, well, we don't have a good idea. And I'm like, well, that's problematic. And so what's really important is the efficiency that a company does to acquire Bitcoin, right? They want to acquire it at higher MNAVs. It should be above 1.22 in Strategy's terms. 1.5 is better, 1.75, 2.0 is better because it's more accretive per shareholder. If you have high cost basis Bitcoin, you could sell that off, and then you could then retire those shares by doing stock buybacks. And then you could also use Stretch to acquire Bitcoin because it doesn't increase the ADSO. And that's structure. And that structure allows the metrics to be good. And when the metrics are good, meaning the trading volume, the open interest, can your position be hedged inside the company, that attracts more capital. And so it's about capital formation. And so I want to thank you, everybody, for listening. I really appreciate it. And I'll take any questions on this. I'll post screenshots of this below the video. Thank you.